This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with David Gold of Access Venture Partners. David, thank you for joining us.
Glad to be here today.
Great. Can you tell us a little bit about how you got into venture capital, and also what is Access Venture Partners all about?
Access Venture Partners is an 18-year-old early-stage venture capital firm. So we've been investing in early-stage tech companies for quite a while now, and typically come in at the Series A first institutional round, but it's a bell curve as far as stage, and sometimes we will invest earlier than that, and sometimes we'll come in a step later than that and invest in a second institutional round as far as our first investment in companies. And the companies we invest in, we get actively engaged in as board members and typically continue to back them in future rounds as well.
And how did you get into this place?
So I've been with Access for over 11 years. And prior to that, I spent a number of years as an angel investor investing in tech companies. And before that, I was a dot-com entrepreneur. So I guess you could say I most directly got into this by starting on the other side of the fence and running a tech company myself that raised over $25 million of angel and venture capital.
Well, I see you're an investor in the blockchain space, and that's certainly a hot space. And maybe you can tell us a little bit more about what are you looking for inside the blockchain world, and we can talk also a little bit about ICOs and what your take on that is.
Sure. So when it comes to blockchain itself, the underlying technology, we're big believers that blockchain has the potential to be very widely disruptive and to disrupt a lot of different industries and have a very large impact. Potentially the impact could be as big as the world in terms of what it ultimately does and how it changes things. Having said that, there are certainly similarities with the early dot-com days in that there's a lot of hype out there. There's a lot of irrational exuberance. There's a lot of easy money, which leads to a higher failure rate, if you will, ultimately in companies. When money gets easy, a higher percentage of the companies that raise money are going to fail. You've got a bit of a bubble going on right now in the space, but that doesn't change the fact that the underlying technology has the potential to be a huge disruption, very similar to back in 1999 during the dot-com days. There was a lot of craziness going on back then as well, but we all know just how impactful the World Wide Web has been to the world.
So when you look at the blockchain space, what are there specific verticals you're looking at or specific applications you think are the place to be at this point?
Well, when we look at it, we put a filter on it and look at it from the standpoint of which sectors do we think are areas where there's the greatest potential for impact, but then we also look at it and think through which sectors are ones that are ripe for the market. And, different sectors are going to evolve at different paces and different speeds. So right now, certainly the hottest sector that has the greatest traction is really the ones around the coins and the tokens and the ecosystem for them, whether it's exchange, trading, transactions, all the things around able to leverage the coins and tokens and move them around. And that's where you do see the greatest traction today. We think beyond that, there are going to be some early opportunities, continue to be some early opportunities, there already have been, with new disruptive blockchain architectures and new distributed business models. And then beyond that, I'd say in the next step, are areas around things like supply chain, regulatory compliance, potentially some things around IoT applications, areas where businesses have a greater ability to really influence the use of blockchain in an ecosystem and to get it done. Some of the things we think are going to take a lot longer, even though there's lots of talk about them out there right now, are things like use in healthcare, use in energy, use in real estate. And the reason being that those industries tend to be technology laggards, not leaders when it comes to information technology. And in the case of real estate and healthcare, you've got an ecosystem where you have to end up getting a number of different players to engage, where those players don't necessarily have the greatest amount of control or influence over each other, very different than a supply chain situation. where if you're buying product from your suppliers, and if you are asking them to do something, you've got a significant amount of sway there. So that's sort of high level what we're focused on.
So when you look at ICOs, as you said, there's a lot of noise in the market right now due to speculation. It is 1999 all over again in some ways. How do you separate out, or what do you look for in the ICO to say, well, this is something I'm interested in versus these that I'm not? What are you looking for inside the ICO?
Well, first of all, as a venture fund, our strategy is that in the vast majority of cases with blockchain companies, we're going to invest in the equity of the company first, and then we'll work with them to figure out if it makes sense to do a token offering at some point or not. We're not a hedge fund, so we're not going to go out there and invest in 50 different tokens. And personally, I think that longer term, that's a really bad strategy. And there's already a lot of data out there that suggests, surprise, surprise, that the vast majority of these tokens and the underlying companies are not going to be successful. And that's not an indictment on blockchain. That's a statement of reality with early stage startups. Most of them fail. And so most of these tokens and coins will fail. Blockchain is revolutionizing a lot of things, but one thing it's not revolutionizing is the success rate of early stage companies. And my view would be that when money gets very easy, which it did in the dot-com days and which it is in blockchain, those failure rates go up, not down, because more companies get funded that should not have gotten funded. And with ICOs, that's certainly the case because the level of diligence that goes on is extraordinarily thin with most of these offerings. So in addition to that, obviously, the regulatory framework around token offerings is highly in flux in the United States and in most first world countries. There's a lot of uncertainty about exactly what the regulatory framework for these is going to ultimately be. So any entrepreneur has to be very careful in thinking through that aspect of what they're doing. Now, having said all that, I am a big believer that there is such a thing as a utility token, and that long-term, we are going to have utility tokens in blockchain-based businesses, and they're going to be an exciting part of the way that those companies do business and a path for them at certain stages and certain parts for raising capital. So that's sort of a quick summary of our views on the blockchain and ICO space.
Well, let's talk a little bit about the token aspect of it. That's a new concept that seems to be coming up. It has a lot of potential to really change the way you incentivize partners, compensate employees, and there's just a lot of things you can do with tokens. What's your take on the token concept of the utility itself, in the sense that what change do you think that's going to have on building out these digital ecosystems?
Well, I think it has the potential to have a significant change on certain categories of companies. The concept of a token is not something that blockchain itself created. So the concept of an economic token has existed for a long time. And the simplest examples I always give is a ticket to a show. When you buy a ticket to a show, you have a token, if you will, that has a purpose and it has a utility. And its utility is it gets you into that show. Interestingly, tickets can be bought and sold prior to the show. In fact, there are ticket brokers that are in the business of buying and selling tickets, and people sell tickets all the time for different events. So a ticket is a very simple analog world example of a utility token. With blockchain, you have the ability to create tokens that have utility in an ecosystem for a certain value or service, and the ability for them to be much more easily traded than a physical ticket or even an electronic ticket can, because with blockchain, you can send and receive these tokens to whoever you want. It also allows you to take a ticket and to virtually tear it up into a whole bunch of small pieces, which, of course, with a ticket would make that ticket worthless. But in the world of blockchain, actually, those little pieces retain value because you can collect those little pieces. And if you get enough pieces, you could add them back together and have a ticket again, in that sort of analogy there. So there are going to be many different models of businesses that are created where companies can leverage this concept of a token as the exchange of utility on the platform and enable business models that can transact in very small amounts of payments to get access to the service that they are providing.
I think that's one of the biggest advantages of tokens is the micropayment aspect of that. Today, the payment mechanisms are not very granular, very specific. And so for that, a lot of people just go without getting paid because there's no easy way to do that. And with the tokens, it'll make that a lot easier. And a lot more people will get paid at the bottom end of the pyramid for that. I've also heard some ICOs actually considering using tokens to compensate employees rather than dollars for salary. What do you think about taking it to that level?
I question that. I think that it's going to be used But again, I think you have to be careful because of the regulatory landscape. And, one can disagree with the regulations and think they should be changed, and that's fine. And you can work towards that goal. But until they are changed, you have to deal with the reality of regulators. And I'm a small government, small regulation guy, but I'm also pragmatic and believe in the rule of law. So it'll be interesting to see how that turns out. Is it okay to compensate employees by giving them tickets to a show as compensation? I suppose so, right? That would be the argument that says that's perfectly fine, right? And if the employees are willing to take tickets to a show as compensation, then that's great. And obviously they can go to the show or they can turn around and sell the tickets to the show. But I think there's going to obviously be some interesting questions there. And presumably it's going to be a taxable event for the employees. So you're going to have to deal with that issue as well. If you're giving something of value to your employees as income, pretty confident the IRS is going to say that's still income and it's still taxable. So you're going to have to figure out how those employees pay taxes on those tokens or coins.
Right. Well, they're paying taxes on the dollar income they get now, both payroll tax and also income tax. But what's different is if you give an employee a dollar, a dollar is a dollar. Give them a token and they make that ecosystem much more valuable. That could potentially drive up the value of the token. And so now they're incentivized to make that token worth more. But as you said, there's always security laws, there's always tax laws, and those will always be there. And we just have to work with them as best we can. But it seems like the opportunity is there to actually incentivize people in a greater way than we have before.
Well, I don't know if I agree with that. I don't think that giving somebody tokens in a blockchain-based business is going to incentivize them any more than giving them stock option in the company. The difference is in the first case, they're obviously not an equity holder in the company. They only benefit from the value of the token, not the overall value of the underlying business, unless the token is a security in the company. But that's not what we're talking about here. So it is a new avenue that I think can be used and can be used creatively. But I think it would be incorrect to say there's not a way to incentivize employees to do things that will help the underlying company be successful today, because you can do that with stock options. Obviously, the advantage to the founders and equity holders of doing it with tokens is that they don't have to give away any equity in the company. So is that better for the employee? It may not be better for the employee. It may be a good alternative compensation path for the equity holders of the company, though.
Well, it certainly, as you said, it brings up a lot of new business models will be coming out of it because the tokens bring another dimension to it that could be pretty interesting as well. Again, security and tax laws will apply, but the opportunity to do other unique things seems like it's coming up more and more. I see you invested in Shapeshift. What did you like about that company?
Well, it falls right in the first category that I talked about that we think is the most ripe for actually having success right now, in that they provide a platform that enables users to very easily exchange one crypto token for another. They don't deal with fiat currency in any way. And because they don't deal with fiat and they have this exchange platform that can do that immediately and without having to wait for a trade to happen, they end up getting integrated into a huge number of wallets and exchanges out there that want to have the ability for their users to trade one token for another. So it's a great business model. We felt like the time was right for it. And it has a great team, which we always invest in team first. And the team is fantastic. Eric Voorhees, the CEO, is one of the luminaries in the cryptocurrency space.
Well, that's great. That's great. Well, in the last minute we have here, what should we cover that we haven't so far?
Well, as I said, we're actively investing in early stage tech companies. Our focus is mostly to invest in great companies that have great teams, and we'll invest across the United States. Although, like most early stage venture funds, we have a bias to invest a little bit closer to us than further away, because early stage companies are a heavy lift and take a lot of work. But we're always looking for the next great company and great team to invest in.
Well, that's great. What's the best way for the audience to get back in touch with you?
Best way is just to get more information on our website, which is www.accessvp, access and then V as in venture, P as in partners, accessvp.com.
Well, great. Well, I appreciate your taking time and hope to have you back soon to dive into more of these topics, in particular blockchain and ICOs, as the space is evolving rapidly and maturing, and a lot of great things are coming out of it. But appreciate your taking time today.
Absolutely. Glad to be here.